Hello and welcome to the latest edition of Damien's Midweek Markets, which is the show where I talk about what's been going on in investment markets and what to look out for in the future. Now, this week has been pretty much a repeat of what's been going on at the end of last week. So the S&P 500, which is the US stock market, started to rally as I made the last show. And what we've had since then is the S&P 500 has kept pushing higher. So we had a big sell-off in May that was caused by Donald Trump starting or reigniting the trade war with China and also starting a new one with Mexico. Now, since last week, two things have happened. Now, Donald Trump has actually relented slightly on the Mexican trade war issue that he was going to have about over immigration, and so he seems to be coming to some kind of agreement with them. The market liked that, and the S&P 500 rallied. Now, it's quite interesting because it was an issue that he brought up and then seems to have semi-rectified, but without any real solution being made public other than on a piece of paper. Now, the market liked that, but the biggest thing the market liked was when the Fed suggested that it would be prepared to cut interest rates if needed, if the economy was weak. And since then, the S&P 500 has steadily marched higher. Surprisingly, it broke above its 50-day moving average, which is now at 2873. And the market sits just above there. It tried to push above 2,900, and had it achieved that, it would have opened the door to the possibility of trying to test the all-time highs we saw recently around 2950 on the S&P 500. But what's happened since is the market's pulled back slightly because it's been built on a lot of hope. If you look at two other markets, two key markets, there is the 10-year US Treasury, which if you go on your stock app is TNX. Now, the Treasury yield didn't rally significantly. It actually rallied slightly. So basically in a risk-on environment, when people like to take on equity exposure, they tend to sell US Treasuries and bonds. So the yields on US Treasuries will rise. They rose slightly, but then they pulled back. And we're still back to where we were this time last week, about 2.12. So although the equity market has been very optimistic, the bond market hasn't been, and perhaps it's unsurprising that we've run out of a little bit of steam in the sudden rally we had, because the rally we've had in the last week on US equity markets, and a lot of that's bled over into other markets globally, has been quite significant. So we're still in the case where the bond market and the equity market are in disagreement, and we're still trying to work out which is right. On the S&P 500, the 50-day moving average is now acting as support. We've got to see if we can hold above that. If we break it down below that, then that could open up for another sell-off. The 200-day moving average, which is one of the key measures that people look at for a bearish, bullish momentum, is now down around 2775. So that's something to keep an eye on. But one of the biggest things to have a look at the moment, and one market in particular that I'm looking at, is the oil market. So the price of oil since April has actually fallen 20%. Now we've gone from around $65 a barrel down to 52, which is about a 20% fall. That's actually classed as a bear market. Now, in recent months, if you're able to, you can't do this on your stock app, but if you're able to map the S&P 500 against the price of oil, you could see there's a correlation. Now, I talk about this a lot with 80/20 investor members. The one thing you want to focus on is in recent weeks, that correlation has started to break. So the market, or the oil market, has fallen while the S&P 500 has continued to rally. They have tended to move together in the same direction. Now, it suggests something might have to give. And with the oil price still continuing to sell off, the oil price falling tends to be a sign of poor economic outlook because we won't need as much oil for various economic activities. And that might suggest that we could have a recession on the card. So the bond market, and particularly the oil market, aren't necessarily backing up what we're seeing in equity markets. So for now, keep an eye on the oil price. If you want to do that on your stock app, you just have to type in CL equals F on your stock app. Elsewhere, over in the UK, the FTSE 100 rallied. It got above that key 7250 level, trying to push up over 7300. On the way to 7400, it started to stall ever so slightly. The DAX has been rallying, it's slightly overbought, so don't be surprised if we get a pullback. So right now, the most interesting thing between now and next week is keep an eye on the price of oil. It could give a hint to where stock markets might be headed. But once again, we're now in a state of keeping a watch on what will happen next. Will we break higher or lower? Now that is it for this week. As ever, you can get in touch with me, Damien at moneytothemasses.com, or on Twitter, moneytothemasses with the number 2.